soon as you came in the door. I just wanna chill, got a slip of rest raw. Married to the money, introduced you to my stove. I'm like, hey, what's up, hello? Seen your pretty face.
Hello traders, this is Philemon Helondo from Fintech Academy. In today's video, I would like to actually explain to you why it's very risky to take trades of the same currency in two or more different currency pairs. Okay, so sometimes, like I remember in December last year, I made a mistake of taking two trades on. I took a trade on GBP Audi and one on GBP. I can remember clearly the other pair, but all these pairs were GBP pairs. Okay, and then what happened is that there was a gap on both of these pairs, and then the price actually went back higher. Okay, so I placed a sell and then price just went so back up. I ended up losing both of these two trades. That's why now I wanted to go through and explain to you why it's very risky to take to trade to put weight on two trades, okay, of two different currencies with a related two different currency pairs with the related currency in them. Okay, let's take a look at the GBP pair. Okay, because recently on Thursday we had the Brexit vote, which affected these pairs, the GBP pairs in common. So what we are trying to do I want to show you exactly the technical aspect of what's actually happening if you were to trade all these pairs or the GBP pairs this week. So if we are to look at GBP USD, so what we are seeing there is we want to focus on the last daily candlestick. Okay, so on Friday and on Thursday we had an engulfing candlestick up, and on Friday a bearish candlestick. Okay, so now if we move to GBP New Zealand and look at the last two candlesticks, okay, we are seeing almost the same thing. Okay, on Thursday an engulfing candlestick up and a pullback, okay, much shorter compared to the GBP USD. So let's take a look at again GBP CAD. On Thursday an engulfing bullish candlestick followed by a downwards bearish candlestick. So you can actually see what I'm trying to explain to you here. So the technical aspect is almost the same. You get almost the same signal on all these pairs at one particular time, but then you have to be very careful not to take all of these trades. Okay, because if let's say you take, we are seeing there it seemed to be a buy signal. Okay, so you buy on GBP Swiss franc, then you go ahead and buy again on GBP JPY, or you go ahead and buy on GBP Audi. What happens? Okay, price goes up, goes almost the same way. So it's like you're doubling your risk on a trade that you're just supposed to risk on one trade. Okay, but then you ended up like doubling your risk. You understand what I'm trying to say? Thank you very much for tuning in. This is all I wanted just to show you, to actually explain on risk management why you shouldn't be trading two currency pairs at the same time. Thank you. This is Philemon Helando from FinTech Academy.